Tom Metzold, you've been managing money for Eaton Vance for 28 years, and you're taking a different type of job at MBIA soon. So before we talk about the type of money that you manage, which was Munis, I want to get your biggest lesson about money management.
Well, the thing that I find most fascinating is the impact on technology has had over the last 25, 28 years. And the fact that when I started in the business, we had physical delivery bonds and you clipped coupons, and now everything is DTC, book order entry, and the advent of mutual funds and ETFs and all of that stuff has really changed the way you buy and sell munis. So never underestimate the impact of technology.
Now I want to get your view on municipal bonds. So what's been happening here so far this year, and what's your expectation for the second half of 2015?
Well, it's been a roller coaster ride. Obviously, we're going to track Treasuries a little bit. Everybody's concerned about what's going to happen with Fed funds. We've got Puerto Rico, we've got Chicago, we have Atlantic City. There's a lot of headline risk out there, yet fundamentally, the rest of the market's pretty solid. We have to worry a little bit about tax reform proposals, which I think will be a non-event. And I do think ultimately we're going to get through Puerto Rico, but when you look at it compared to Treasuries and other fixed income investments, it's still pretty cheap. And the supply-demand dynamic is very positive in the sense that more bonds are getting called, redeemed, and matured than there are new bonds getting issued.
Let's go back to Puerto Rico, because it is a headline risk. How do you avoid the landmines in Muni world?
Well, at Eaton Vance, we were successful in getting out of our uninsured Puerto Rico early on, and we still own some insured Puerto Rico because we believe the combination of the fundamental return on what you're going to get plus your insurance is going to be money good. You have to be very, very careful because you've got the whole issue with the Chapter 9 potential moving in on the public corporations for the PREPA, the Electric Power Authority, and the Aqueduct and Sewer Plazas. Personally, I think the GOs are money good, but you've got to be very careful because every day a new event arises, and I think what you have to do is step back and say, okay, what's the big picture here? And then what will really drive this will be how the three major borrowers sort of compromise, obviously the hedge funds, the insurance companies, and the mutual funds, because they all have different motivations, they all have different expectations and objectives. So it's going to be a roller coaster ride.
And you're heading to MBIA, and we've certainly seen the return of insurance and insured bonds in the muni market. Can you talk about what that means to the entire sector?
Well, post-financial crisis, all those AAA bond insurers lost their AAA. We now have AA ratings at at Assured and MBIA and at BAM. And I do believe there's a value proposition that exists there because the capital that they have available for paying claims is actually in excess of what it was pre-financial crisis based on the old AAA rating criteria. A lot of people are looking at Puerto Rico and thinking it's going to be the death knell of the insurers. I don't think that's going to be the case at all. I do think there's still value there.
All right, now talk about your outlook for rates and how higher rates, if and when they come, will affect munis.
Well, it's interesting because if you go back to the last time the Fed raised rates, which was, I believe, June of '04 through June of '06, the Fed raised rates 17 times for 425 basis points. Municipal long-term yields declined. People say, how can that be? The Fed raised, well, because one of the reasons the Fed raises rates is because the economy is getting better and stronger. Well, that's good for municipal bonds who generate revenues through taxes and property taxes, sales taxes, capital gains, et cetera. Well, that's good for muni credit, and when you look at the fact that the yield curve was extremely flat, that natural steepening, or I should say flattening, the steepening to a flattening takes place. And so I wouldn't be surprised if you see outperformance of munis versus treasuries even in a Fed tightening environment.
And when will the Fed make that move, in your opinion?
Well, I've been saying now for almost 2 years it's not going to be until 2016. And so far I've been right, and I still think it's not going to be until 2016. I just don't think the economy is strong enough to handle it.
All right, thanks a lot, Tom.
Thank you.
Thank you for watching The Street.